Support this content by subscribing to this channel. How does inflation affect the economy? Inflation is the rise in price of goods and services over time, which erodes your purchasing power. This means it takes more of your dollars to buy particular items. If your income does not rise with inflation, your buying power will decrease. So, how does inflation impact our lives? Well, think of your pension and savings not having the same buying power when you are ready to retire. Inflation doesn't affect everything the same way. For example, gas prices. The Consumer Price Index, CPI, is a monthly measurement of U.S. prices for household goods and services. CPI equals the cost of goods of the current month, divided by the cost of goods of the last month, times 100. The Consumer Price Index represents the prices of a cross-section of goods and services, commonly bought by urban households. This cross-section represents around 93% of the U.S. population, and it factors in a sample of 14,500 families, and 80,000 consumer prices. The CPI can occasionally give false readings, due to variables in the current economy. Inflation doesn't affect everything the same way. For example, gas prices could go up, while the value of our home decreases. Oil prices could go up, causing you to pay more for gas the next time you fill up your car. Inflation can affect your retirement savings. For example, your savings will buy less as time goes on. To be prepared, you have to save more than you think you will need. Taking the example that is currently happening, fixed-rate mortgage holders have an advantage. With the Bank of Canada and the Federal Reserve in the U.S. raising interest rates, variable mortgage holders are not benefiting at this time. If the interest rate goes up, more of your payment goes towards the interest, and less to the principal. But if the interest rate goes down, more of your payment goes towards the principal. This means you pay off your mortgage faster. Inflation could lead to rising stock prices, as companies adjust their operations for higher costs in the supply chain and the production process. A hedge against inflation in the stock market is investing in dividend-paying stocks to offset rising prices in the economy. Stable companies can continue to pay dividends during an increased inflationary period. Here are some key takeaways about inflation. Inflation raises prices, lowering your purchasing power. Inflation also lowers the values of pensions and savings over the long term. Assets such as real estate and collectibles usually keep up with inflation. Variable interest rates on loans increase during inflation. Thank you for watching.